All right, guys, welcome back to the Independent Investor Channel. My name is Ryan. I thought it'd be cool to roll out a video and talk about how much money I actually invest per month on a dollar cost average schedule. And then I'll also disclose to you how much I invest every year. I think this is really important for individuals to understand how much they are capable of contributing to the stock market. We don't live beyond our means. We live drastically below our means. We live day to day, month to month, week on week. Now, we don't struggle, but we are very, very aggressive with identifying surplus capital in the budget, almost to the point of being somewhat, we sacrifice. We really do. We sacrifice. We don't do things that are frivolous. Now, we do live, and we are not minimalists, okay? We live our life. We do go on vacation. We do things, and we do enjoy what it is that we have currently. But to sit there and say that we live paycheck to paycheck because we blow every dollar that we get that comes in as an inject, that would be far from the truth. And in this video, I'm going to kind of disclose for you guys what it is that we do, even with my salary, you know, being where it is, middle income salary. A lot of folks out there can maybe relate with this. A lot of folks maybe can relate with the fact that this dollar cost average program that I'm going to disclose to you guys started with a mere $25 per month. That's where we started, $25 per month per account. Okay, we started the two Roth IRAs at the same time. At the time, they were not self-directed; they were managed accounts, but we started those at the same time. We started those on a dollar cost average of $25 per month, and I think you guys are going to kind of understand this was, you know, 14 short years ago. Time really does go fast, and it's amazing that if you can hang on, you can stick with your program, and you can stay within your means or below your means. And I think the time to do this is as soon as you can. And you get used to a certain style of lifestyle, and as the income increases, your lifestyle doesn't necessarily need to, okay? You're going to get pressures from society. You're going to want to keep up with the Joneses like everybody else, and you're going to want to have that beautiful car sitting in the driveway. Seek out a different alternative path in your life. I think when you do end up foregoing some of those temptations, I think it has the potential to pay off tenfold down the line. Okay, guys? So in this video, there's going to be some figures thrown at you, but it's really going to be the take home for you to understand that to get to these figures, we really do make a lot of sacrifices in our lives in living the best that we can, and don't sacrifice paying ourselves first, all right? So the first one, out of my income, I'm at a 10% contribution rate. Nice round number. I've just recently increased it to 10%. I did get a promotion, so I did go ahead and use that as kind of an excuse or a reason to say, hey, let's bump this up a little bit. We can do that. That equates to about $450 of contribution every single month. So that's $5,400. Now, I want to be very crystal clear with you guys. These three contribution buckets that I allocate to every single month, every single year, are tax protected and wealth preserved accounts for the most part, okay? Very, very minimal expense in these, and these are all Roth protected dollars within these three buckets. So very, very exciting. This is one of the reasons why I'm very aggressive with this top end of the portfolio. These contributions that I make are the most important that I make because they are going into tax protection and they are going to wealth preserved vehicles, which you know is the root of my program. That's how I render so much success, is being aggressive on pursuing those two aspects, okay? So 10%, $450 per month equates to about $5,400 per year. Not bad. That gives me the potential to increase that. Now that $5,400 is not max contributing. That's just what I can afford. That's just what I do. And the secret in this is to understand what it is that you guys can earmark, what it is that you can do. Whether it's $25 a month at $300 a year, that's what you can afford, then that's what you can do if that's what you choose to pursue. But anything is possible and anything is relative, okay? You don't have to contribute the way I contribute. Some people contribute much more, others contribute a lot less. This is just what I do, okay? The next one is the self-directed Roth, number one. I've got some real interest in this account for certain. You guys know I do not contribute monthly. I may change that up. Because what I've been doing is max funding. It's been $5,500 in years past. This year it'll be $6,000 again. I typically contribute to that on January 1. I'll take the full $6,000 from the savings, go ahead and convert those into Roth contributions. So very simple, $500 a month is the dollar cost average, and I may go back to that. Verdict is still out. This is a conversation on my channel that gets raised all the time. Ryan, is it better to put it in there at the start of the year as opposed to spreading it out over the year? I think the verdict is still out. I'm not sure, because you're always kind of just hanging your coattails on that January time frame, which after the holiday season is usually a pretty good run up in the market, and then January rolls around and it's typically a good reason to kind of sell off a little bit. So are you getting a good injection point, or are you buying at traditionally more of a higher month? And I think that's what dollar cost averaging does for you if you do end up going, just putting it in there per month, maybe strategically buying around your buy point, but at least injecting some dollars into your accounts once a month allows you to spread out those buy points a little bit better and take advantage of the real down months, and then maybe average it out with some of the up months. But $500 a month there, and then $6,000 per account. Now that's self-directed 1 and self-directed 2. All right, so 2 accounts there, $500 each per month. Okay, so from the Roth perspective, Roth tax protected dollars that are going to grow into the future, those will be withdraw eligible down the line for me, kind of a goal that I'm shooting for, to be able to withdraw those tax free. So the way the figures shake out is $1,450 per month of contributions going to the retirement accounts, okay? So the tax protected dollars that we are contributing every single year is $17,400. That's just what we've got, a little bit less than $20,000 going into the tax protected vehicles, okay? So that's the Roth dollars in that category. So just to give you an idea of where we are now, a few dollars that I thought would be nice to push out for you guys for full transparency is the taxable brokerage contributions. Now, you guys know that I have a bond account. I don't contribute to that on a schedule yet. That may change, but as of yet, I strategically buy that when I want. For example, if I have $500, I want to make a purchase of an intermediate term bond ETF, I'll do that. Okay, but it's not set on any type of schedule like my M1 finance account and my first trade account. I'm active account holders in both of these. They are both taxable brokerage accounts, obviously, because I've got my Roth dollars in the other account and I contribute to those to the max. These are taxable, but first the M1 is the smaller of the 2 accounts. You guys know the makeup of those, but the contributions run at $25 a month. This is indicative of what you could look to do as a starting investor, what you could afford potentially. So this is indicative of what a starting portfolio could look like. So $300 a year there in that taxable bucket in M1 Finance. And then finally with the first trade opportunity, that's where I'm generating the YouTube earnings and filtering those into the first trade account, and using those YouTube earnings to leverage the dollar cost average and supplement that dollar cost average program of funding the first trade account. That's running at about $250 a month right now. And so you're at $3,000 a year there with those contributions. So holistically, we've got the majority of our contributions going to the tax protected vehicles or buckets. if you will, and then $3,300 going toward the taxable brokerage accounts. For a total contribution over the course of a given year, these typically will evolve over time as I'm aggressively trying to chew up that surplus and meet that happy balance between what I'm spending and what I'm investing every single month. Okay, so the total is $20,700 per year for me on a dollar cost average schedule. So if it gives you some motivation, if you heard what I said about starting with $25 when you first start, and you watch it and it doesn't grow and it doesn't grow and it doesn't grow, and you watch it and you watch it and you watch it, sooner or later those dollars really do start to compound on themselves, and they especially do so when you're not paying so much attention to it. You know, if you're just building that wealth like I talk about, hopefully when I declare that $20,000 to you per year, hopefully you guys get motivated to say, man alive, Ryan did it, I can do it too, which you can, anybody can. It just takes that willingness to do it and implement your strategy. Guys, thanks for tuning into the video. Hit the subscribe button for me. Leave your comments at the bottom of the video, and you want to share this with anybody interested in the dollar cost average program and saving for their future as well. Recommend to the channel, bring them on, plug them into the message, man. We'd be glad to have them. Guys, thank you so much for tuning into the video, and good luck in your investment future.